Hello and welcome to the Freya Savage podcast with your host, Freya Savage. This is the podcast where we dive into the attitude, the mindset, and the strategy required to live a fully self-actualized life. When I say self-actualized, I'm referring to our own potential of ideal freedom, limitless wealth, and perfect creative expression. After working as an investment analyst and financial advisor for over 10 years in a very corporate environment, I quit that life and I created my own money and business school. Very quickly, I was making over 5-figure months, working as much as I wanted, generally looked around 3 hours a day. And just by being me, by creating transformational content, just by being me. So my mission is to live a fully lived life, which I feel like I'm already doing. Of course, there is always room to go deeper and go higher. And part of that vehicle for me is to empower other women to rise up to their potential through financial education, business mentoring, and spiritual guidance. So if you enjoy this episode, go ahead and take a screenshot and share it with anyone you think might benefit. And if you share it on social media, go ahead and tag me. Okay, let's dive in. This episode of the podcast is brought to you by AussieAscension.com. Aussie Ascension delivers fine, exotic health food products from around the world right to your door. They are distributors for Laird Superfood, which I personally love. They make vegan coconut milk creamers. They have all different flavors. My favorite is the unsweetened one, which I like to have in the morning with raw cacao and a blend of adaptogen mushrooms, and I mix it up together with some almond milk or some coconut milk, and it is really, really fine. I quit coffee a few years ago now and don't even notice it when I have this. They are also suppliers of Energy Bits. Energy Bits are the highest quality chlorella and spirulina in the world, I would say. I'm biased. I love this stuff. And they're in tablet form. And then they also stock Primal Herbs, which is my favorite of adaptogen mixes. The one that I like is the memory and cognitive support that's called NeuroShroom. You can go ahead and order directly from Aussie Ascension by going to AussieAscension.com. That's AussieAscension.com. Right now, I have my calendar open for free mini one-on-one strategy sessions. The reason why I have done this, which I have not done for at least a year, is because I'm just enjoying the conversations that I'm having so much with my audience right now. I'm having so many inspirational conversations with women. So if there's anything that you want to work on together, be that business, wealth, love, or health, and self-actualizing those areas, you're welcome to book in a session with me. It's totally free. There is no obligation at all. If it feels like a fit, I will ask permission if you want to talk about working together, but that is not the goal of the call at all. The goal is to fully support you in whatever areas of life you feel like you could use with some expanding right now. So if you'd like to go ahead and book in a call with me, we will put the link in the show notes below. This offer is not always available. I don't know when I'm going to close off this offer again, but it's open for at least the next week. So go ahead and take that opportunity if that feels right for you. Hello. For those who are watching this on Instagram, you are so lucky. This is my second video I've recorded today. And by the way, my shirt is meant to be like this. I can afford new shirts, and this is a new shirt. It's a look. It's a vibe. Okay, so what I wanted to talk about today is I've been doing a sequence of videos around money and investing. So if you haven't watched the last 2 videos I did on money and investments, do that, but not right now. Stay with me now if you're joining live. I am going to package up these videos, and I do package them up and sell them as separate programs. So you're lucky to be catching this live and free of charge. So what I wanted to speak about today is one of the most important fundamental principles when it comes to investing, and it's something that people forget about. Even the experts forget about it. And it is really the most magical. I don't say magic and maths very often together, or magic and finance very often together, ever actually, because it's not really a magical thing. But truly, compound interest is magical. It looks magical, but it's mathematically makes sense. It's not guessing. It's not making up numbers. It's not assuming. It is math. That's what I love about math, right? That's the answer. There is nothing else to it. It's not like what's going on right now when it comes to the questions people are asking, which I don't even want to say what it is, because I don't want to get one of those banners at the bottom of my live video saying we've added in health information. Anyway, this investing is actually very simple if you follow these fundamental principles. And what I love about compound interest is that it is so simple, and it doesn't just make sense, it is true, it is absolute, because it is math. It is based on numbers that are real, and it works. So the reason why a lot of people forget about compound interest is because compound interest takes time to work. So when you're investing, a lot of people have this idea, and it's because we weren't taught about this, right? Have this idea that investing will get you rich pretty quickly, and what are the returns going to be over the next year? And what is that? How is that going to affect your wealth in your portfolio? While that's an important question of what are the expected returns over the next year, it's not really it's not really the right question. The right question is, first off, we want to look back, and we want to take a step back, and we want to analyze how the market actually works. We know that returns fluctuate. We know that the market goes like this, right? And an average cycle, it used to be around 7 years, or actually even less than that, around 5 years, that it would move through one of these cycles. And now it's increased to around 7 to 10 years. So the market is going to be down, and the market is going to be up during the time when we're investing. We don't know where we are in the market. We can guess where we are in this cycle, but we don't know for sure. It can always go further down, and it can always go further up. So the way to invest, where you are essentially hedging your risk, which means you are de-risking, you are reducing the outcome that you're going to lose money, right, when you are de-risking. And at the same time as de-risking, you are also increasing your essentially guaranteed return. And you do that by compound interest. Both of these things, but both staying in for the full cycle and compound interest, require time. So they work really well together. For compound interest to work, it starts to build up over, you might see a little bit over 5-10 years, but when you get to 15 years, this is really where the magic starts to happen. And this is where your investments, they start to double, and then they start to triple, and then they start to quadruple. But the thing is, most people don't get there because they're pulling their investments in and out. They don't have a solid investment strategy. They're focused on the short term, and they are looking at what's happening in the economy, or they're getting distracted by other shiny investments and that is short term. So compound interest only works if you invest for the long term. Why would you invest for the long term? Because when you invest for the long term, you build up an asset base, and that asset base provides you with passive income. That is my goal when I invest, and that's what I teach as well. So it's not about building up a huge amount of asset base that then you have to be selling and buying to make money. We want something that's just on autopilot, that's spitting out income. And that happens from, you can invest in property, you can invest in shares. These are the two main asset classes that allow you to do that. So that's what I teach. And like I said, you can learn more about that in the past videos that I've done on money. So I want to focus purely on the power of compound interest in this particular video. And the reason for that is because it actually gets me excited. Because it's logical, it makes sense, it's based on numbers, it's based on facts, and this is actually what gets you rich. I say don't invest to get rich, but if you invest over the long term, this will grow your wealth. Hi Lou, nice to see you here. Lou knows all about compound interest because she did invest like a queen. So you grow, so the power of compound interest takes a while to kick in. And what this means is when your assets make an income or they grow in value, rather than pulling out the income for yourself to use right now, you are reinvesting it. You are putting it back in. So let's say you're invested in the share market, which has an average return of 9.8% in the S&P 100, I think it's 100 or 500, since inception of the share market, right? So remember, you're not going to get that every year. Sometimes it's going to be much lower, sometimes it's going to be much higher. That's why we want to invest for at least one full cycle, which is 10 years. So when we're investing this way, Lou said highly recommended. Yes, it's an amazing program. So when we're investing, I've lost my train of thought. Stay with me because it's going to be good. Compound interest, long term, I don't know. Okay. Oh yeah, reinvesting our income. So when we reinvest the income, so let's say our portfolio makes 9.8% this year, and maybe 4% of that is from income in the form of dividends if it's with shares, and then the other 5.8% is from growth, right? So we see the value of our portfolio grow by that 5.8%, plus we get paid dividends from the companies, so that 4% goes to us. Instead of taking that 4% dividends, we reinvest it. And then the next year, so now our portfolio has the full 9.8% of the year, for the year. And then the next year, it's 9.8% again. And that 9.8% now compounds on top of the growth that you made. So now you're getting growth and interest on top of the growth and interest you had from last year. So you're getting money, you're getting value back for something that you never actually put money in for. You never actually put the money in yourself. It was already gifted to you, in essence, from growth and income. And now you're getting more growth and income on that growth and income. So you can see how this starts to build, year after year after year after year. But you have to invest for the long term for this to work. I have my computer next to me because I want to show you all an example. So let's say our initial investment, I'll just put 0, but let's say per month we contribute $250 per month. And we do that over 50 years. Why would you do that over 50 years? Because remember, doesn't mean you can't access that money for 50 years. It means you're building up an asset pool, and that's going to produce income every single year. We don't want to be building assets that then we have to be buying and selling all the time. Well, I don't. That's admin heavy, plus the transaction fees for buying and selling. Think about property, think about any other kind of asset. Shares now you can buy and sell fairly cheaply. You can buy fairly cheaply, almost for free in a lot of countries. So this way, you don't need to do any admin. You don't even need to manage it, essentially, because it's set up working in the background, and you don't need to spend any time on it. That's what I want to do. Even though I studied finance and I worked in finance, I am not that excited about it. I'm excited about what it can do for us. And that's what I wanted. I'm excited about it making our life easier and supporting our desires, supporting our lifestyle, supporting our families, supporting whatever it is that fulfills us. That's what I'm excited by. So let's say we're investing forever, which is what I suggest you do. So length of time, 50 years. Then interest rate, 9.8%. That's not a number I'm making up. That is the average return of the share market in America. And we are going to compound it semi-annually. And the reason for that, don't worry too much about what that means. But essentially that means that it's because dividends generally come out yearly, or they can come out semi-annually. So we're compounding it semi-annually. Calculate. And I want to show you this amazing graph. Amazing! Gets me so excited. I hope you can see it. Oh, it's a little bright. Okay, you can. I'll try and use my fingers here to work through this. Okay, so the blue line down the bottom, this is what we've been putting in. $250 per month for 50 years. Blue line. Red line is the value of our portfolio because we've been reinvesting. We've been getting that compound growth upon growth upon growth upon growth, or income upon income upon income upon income. That's a tongue twister. So the red line really starts to pick up. Let's see what year. Should be around, okay, so this one is around year 20. It really starts to pick up. And then we can see if we leave it in there, it exponentially grows compared to what we've put in. So over the 50 years of putting in $250 a week, we have contributed in total we have contributed $150,000. So over 50 years, we've contributed $150,000. That's pretty good. If we had that in the bank account, sure, I'd take that. But we haven't put it in the bank account because actually we'd be losing money if we kept our money in the bank account because of inflation. And instead we've been investing it in a very simple way, passive investing it's called. And now we have $3.6 million. $3.6 million. We've only invested $150,000. This is not a crazy investment, guys. I'm not talking about betting on Bitcoin. I'm not talking about betting on Tesla or any other hot, sexy investment right now. That is totally not all hot or sexy. It totally turns me off when people talk about it like that. Because, anyway. Okay, let's not go into it. That this is using boring. I'm going to say boring because for a lot of people it's boring. Boring investment strategy. And it's simple, but it takes time for it to work. And the other ones, anyway, even if you go the other way, you know, where you are actively investing, you're trying to get rich quick, you're probably going to lose. Most people lose. It's not that you're not intelligent. I'm not saying that. I'm just looking at the averages. The averages say 90% of active cryptocurrency investors lose money, and 80% of share market investors lose money. You don't have to be in that percentage. It doesn't make sense to be in that percentage because I'm using numbers here and facts and averages. And I know, based on the facts, this is not just something that I'm making up. I know that this way will grow your wealth over time. This is the way that works. This is the only way that is essentially a sure bet. And the numbers also back that. So if you invest for at least 15 years in the way that I teach, you're 99% guaranteed to make money. That's essentially a guaranteed investment. That is what an investment is. An investment is a guaranteed return. This is an investment. Short-term investing is not investing, it's gambling. And you don't get the benefit of compound interest. So compound interest is what just took our investment from $150,000 to $3.6 million. And what can $3.6 million do? Well, if you're investing in the share market, it depends on where we are in terms of interest rates. But in general, you know, you can say around 4% income not return. Remember, your portfolio still grows when you start to draw an income down, when you start to get paid those dividends instead of reinvesting it. Your portfolio still grows, just not as much. So when we do that, 4% on 4 million is 4%, 40,000, 80,000, 106, almost $160,000. That's almost $160,000 you get tax-free every year from following this really simple investment strategy. But it takes time. And I know right now, I feel like I'm fighting against the average millennial, because we're so used to instant gratification and we want things so quickly. This is not the way to treat your money. It's not the way to treat your investments. It doesn't work. This way works. But you have to stick to it. You have to be consistent. And when you understand how compound interest works, rather than feeling as if you're delaying gratification, think about it like you're growing your money every day. Every day that you keep your money in your investments, it's growing, even when the market goes up and down, because you understand the power of compound interest and you also understand the market goes up and down. So that's it for today. I hope that fed your financial education, and I hope that you got something out of this. I would love to hear from you. You can send me a message or write a comment below, or if you're catching this somewhere else, you can contact me through Instagram, Freya_Savage_. Okay, see you guys. I hope you enjoyed this episode. If it resonated with you, go ahead and take a screenshot and share it with someone else who you think it might be of benefit for. If you share it on social media, I would absolutely love if you could tag me. My handle is Freya_Savage_. If you want to see what I have going on, you can subscribe to my mailing list. Go ahead and head to my website, freyasavage.com. I'm also very active on Facebook on my business page, which is also Freya Savage. I hope to see you around. Feel free to reach out to me, and I look forward to a long and prosperous relationship together.